So hi guys, welcome to today's TMC Connect webinar. Don't get flooded with fines, a lender's guide to flood insurance obligations. We're going to get started in just a moment and start to see attendees filter in on the line today. Don't blink your eyes, you are seeing correctly. It's Tom Gallucci here, now on the Zactus side of things. Just as a reminder for housekeeping for the audience, should you have any questions throughout, lines are muted, so do feel free to drop those in either the chat or Q&A buttons. It should be at the bottom of your Zoom screen here. And don't worry, we'll save time at the end for questions if it allows. But if you've got a good question, pop it in there and we'll stop in process and kind of answer those, as we want to address your inquiries as they come up in today's fun conversation. But on that note, being minute after the top of the hour, we can go ahead and get started here. So once again, I'm Tom Gallucci, now EVP of Strategic Sales here at Zactus after 8 glorious years at the Mortgage Collaborative. And I'm joined today by our in-house expert on all things flood, our subject matter expert and Vice President of Flood Solutions Sales, Steve Murkison. Hey, Steve.
Hello.
And then just as a reminder for our audience here, towards the end of today's webinar, we'll do a dive into an exclusive summer promotion that we at Zactus have just for the TMC members, featuring what I would say is probably the best promotional pricing you will find in the mortgage industry for Zactus's Flood Report X. But on that note, we can dive right in. So topic at hand today is not getting flooded with fines, a lender's guide to flood insurance obligations. But before we go in, just wanted to provide a quick refresher on who Zactus is and what we do. So Zactus is the leading verification innovator in the mortgage industry. We've got over 6,500 clients, and they could range from the largest bank and independent mortgage originators out there to credit unions as well as mortgage brokers. In fact, Zactus was awarded ICE's Mortgage Technology Innovation Award for Lender's Choice as the most innovative service provider just last year in 2023. But today, Zactus delivers tri-merge credit reporting data to nearly 30% of the mortgage lending market. Many of our clients also bundle together their verification suite with Zactus, and that can incorporate income, assets, employment, tax data from leading tech providers that's delivered to our clients on our proprietary Zactus 360 platform. So it offers really a customizable cascade waterfall approach to personalizing your workflow as a lender to be able to control costs, maximize operational efficiencies and accuracy. It's our goal here to further enable our clients to close loans faster and obviously more profitably. But there's so much more to that to Zactus, as you can see on the slide displayed. We've got our fraud reporting and pre and post close QC service suite, which also includes HMDA LAR reporting data. Our property solutions include our Flood Report X offering, which we're going to dive into later in this conversation, as well as our valuation suite, which includes our appraisal firewall ordering technology, VeriSite X to provide interior, exterior photo and video property inspection reports right from your mobile device, as well as Scorecard to review appraisals before underwriting for quality checks. So there's also score optimization, rescores, lender alerts for score changes, and consumer-friendly reports to provide insights to your applicants for potential score improvement strategies, as well as our data solution suite, which offers products including portfolio monitoring, pre-screen leads, as well as lost lead and lost mortgage analysis. So needless to say, here at Zactus, we've got a depth of solutions to support lenders of all sizes and models. But for the benefit of today's discussion, we're here to talk about flood compliance and lender obligations, as well as some really good tips and tricks. So on that note, I'm going to turn it back over to our resident expert, Steve, and allow him to dive in.
Thank you, Tom. First of all, I appreciate you being here. I'm thrilled to go through today and talk about lender compliance as it relates to flood insurance, flood zone determinations. May be not the most exciting topic sounding to some, but those involved in maintaining compliance within a lender shop know the complexities and importance of this. So because it is a short webinar, we're going to be taking this at a high level. We certainly can take some questions, but I really can't get into the weeds with each of these items because they can be lengthy and rather detailed. I think maybe a great place to start is a history lesson, so we can understand why we are where we are with flood compliance. So going way back, prior to 1968, the only flood insurance mechanism was with the private community, private insurance companies. Private companies had a hard time modeling for flood risk, and by the nature of flood events, they are necessarily very concentrated. It was difficult for the insurance community to spread that risk and adequately price and pay claims for the peril of flood. Therefore, few companies offered flood insurance policies, and the flood policies that they offered really provided very poor coverage and were relatively expensive. So very few people had flood insurance. When a major flood event occurred, it was left to the government to step in with disaster relief. Therefore, the taxpayers carried the burden of the cost of the flood, or more often than not, it was left for uninsured flood loss for the individuals affected, causing people to lose their homes or businesses and their livelihood. So Congress saw the need, and in 1968 established the National Flood Insurance Program, NFIP, with the National Flood Insurance Act of 1968. This offered government-backed flood insurance. It was totally voluntary, so lenders were not involved yet. In 1973, just 5 years later, there was the mandatory purchase requirement enacted, which basically said if a property is in a high-risk zone, a property that is backed by backed by the government, a federally regulated lender was involved in providing the loan, flood insurance would be required. The issue with the 1973 requirements is it really had no teeth. That didn't occur until 1994, when the regulatory agencies came into the picture with the responsibility of ensuring flood compliance and the ability to level fines. So that's really when the lender requirement for maintaining flood compliance took hold in a significant way. After the 1994 Act, it was pretty much business as usual. There were other legislative actions. There was a 2004 act that mainly dealt with insurance rates and mapping and the like, very little with the lenders, right up until 2012. 2012 was a major reform with Biggert-Waters, are known as BW12. In that Reform Act, they really looked at the debt associated with the NFIP, where we eliminated some of the subsidized policies. It also created a glide path to actuarial rating, which then turned into risk rating 2, the current mechanism for assessing the policy rates. It also introduced, and this definitely falls into lender responsibility, the lender's ability and need to accept private flood policies as well as the NFIP. So basically introducing competition. So that's the previous slide covers the acts of Congress. These three actions are the regulatory agencies' actions over the last decade. The first being in 2015, dealing with the forced placement. So forced placement occurred prior to 2015, but this really quantified the notice requirements, the time frame of giving notice, and the requirement of forced placing flood insurance if the borrower fails to maintain coverage or doesn't maintain adequate coverage. A year later, in 2016, the escrow requirement came to be. Again, flood insurance was escrowed prior to 2016, but this set the stage that it was required for basically all residential loans. There's few exceptions. But basically, if a property is in the mandatory purchase requirement in a special flood hazard area, those insurance premiums must be escrowed for residential. And then in 2019, I mentioned the BW12. So the act came about in 2012, but it took the regulators 7 years before they adopted the final interagency rule associated with private flood insurance policies. So beginning in 2019, lenders must accept private flood policies that meet certain criteria, basically are as broad as an NFIP policy. It also established discretionary acceptance, meaning a lender may accept policies that do not necessarily meet all of the criteria for mandatory acceptance, but do meet safety and soundness and some other criteria from the lender. They may accept a private policy. So all of this relates to getting competition within the flood community. So to kind of summarize the requirements, during the origination process, the lender must obtain a flood zone determination, put on a standard flood hazard determination form. Now, if the lender can do it themselves, nobody does, but technically, it's the lender requirement to have the special, the standard flood hazard determination form. But people outsource it to vendors to produce this compliance product for them. The vendor must produce it on the standard form and guarantee the service. I mentioned penalties. Now this is really the poster child of penalties for the FDPA. But in 2020, the OCC leveled a fine at Citibank of just shy of $18 million. This related to, I mentioned the notice requirement for forced placement. This related to poor policies and procedures being in place that didn't timely notify borrowers of the forced placement requirement. And as you can see, a huge fine. Now, very few fines are anywhere close to this size, but it does show the importance of flood compliance and the fact that fines can be very hefty. I just mentioned a bullet point here with the lesser of three rule. That dictates the amount of flood insurance that's required for a policy under the mandatory purchase requirement. So, simple terms, it's the principal loan balance or the maximum amount of flood insurance that's available from the NFIP, which for residential is $250,000, for commercial $500,000, or the replacement cost value of the insurable property. Do's and don'ts. So can be looked at as best practices or required practices for some of this. So again, you must inform the borrower through the origination process if a property is in a special flood hazard area and their requirement to obtain and maintain the proper amount of flood insurance. What I would say is throughout this, communication is the key. It's providing the proper notice at the proper time with the proper language. It's also important to have the correct messaging outside of just the regulatory language that's required. So throughout the industry, we should not be telling a borrower who's not in a mandatory purchase requirement or not in a special flood hazard area that they don't need flood insurance. Obviously, the better messaging is flood insurance is not required as a condition of this loan. We do know that many properties not in special flood hazard areas do flood and are subject to flood risk. So putting out a bold statement that somebody doesn't need flood insurance doesn't do them any favors. And if they rely upon that statement and you as a position of authority providing that could subject you to a claim. Change gears just a little bit and talk a little bit about Flood Report X. So Xactus purchased a flood company a little bit over 2 years ago. So we have our own flood service. We control the processes and the technology, the output. We have a philosophy of basically providing everything with our flood zone determinations without add-on fees. We just don't have junk fees. So with the cost of a life of loan determination, you'll get the HMDA census tract data, an aerial image, the regulatory borrower's notice that we talked about earlier. We also have some value add reports available with the product, the seismic report, which is particularly useful for multifamily and some commercial lending, a LOMA letter of map amendment pre-qualification report, which just gives the borrower an indication of the likelihood of a LOMA being accepted for properties in a special flood hazard area. We don't charge for transfers or disputes, rush requests. We just don't have any additional charges. There's one fee and you get everything. We also have this no close, no pay feature where we will reimburse the cost of a determination if the loan doesn't close. From our perspective, the flood zone determination provides you no value for loans that don't make it to the closing table. So we'll absorb that cost. I would say we have the best manual turn time in the industry. We have a very competitive automation rate, but there are some determinations that need manual review. We're producing those in less than 4 hours currently, and well, significantly less than 4 hours currently. And that's our standard turn time for manuals. That's many other vendors' rush turn time. We have a special property life of loan report, which supports multiple structures on multiple parcels. And we're a full service flood company. So we do process LOMA applications. We have a panel of surveyors across the country for elevation certificates. We have a disclosure product, and we do have a replacement cost value estimate. So if Fannie Mae goes through with their proposal to require a replacement cost value estimate at the time of origination, and very possibly every year upon policy renewal, we can support you with that. I'm going to go ahead and turn it back over to Tom to talk about the TMC promotion.
You got it, Steve, as you promised. Very exciting stuff and flood compliance guidelines, but happy to bring together an exciting promotion since we love our TMC family. Steve and I pulled some strings internally, and we feel we've got for the TMC membership really the best promotional offer you'll find out there for life of loan flood certification pricing. So essentially, it's active right now, but any TMC member that signs up for Flood Report X with Zactus before September 30th, or by September 30th, the end of Q3 essentially, Zactus will offer $5 per order for your first 90 days once set up on Flood Report X. If you think about that for average pricing out there, most lenders pay double or more per order. So not only do we have this above and beyond promotional price of $5 per order for that first 90 days, better yet, once the promotional period ends, we're offering $10 per order life of loan just for TMC members. So that's significantly below what we offer as retail out in the industry. And if you're lucky enough to have better pricing than $10 per order, kudos. And we will also then match that pricing from your incumbent provider. You just need proof of invoice or some sort of documentation to show that pricing out there. As you see on the screen here, there are some LOS providers that have fees or toll fees, we like to call them. So if you inquire directly with Steve, he can provide more detail on which providers those are and the per loan fees associated. So to summarize, as long as you sign up with Zactus for Flood Report X by the end of September, you get the most comprehensive flood report in the industry, and you get to take advantage of our $5 per order promotion. As Steve mentioned, this also includes our no close, no pay offering. So essentially, if the loan doesn't close for any reason, you don't pay. So we're really excited. You're going to hear more about that from within the membership. We'll also be talking about it at the collaborative conference in Denver in September, which we'll have a very active role with. You get to see our president, Shelley Leonard, too, as the guest host on the rundown there. But let's go ahead and open it up for questions from the audience. And just to get this one out of the way, no, our promotional offer is not too good to be true. Just take us up on it and you'll find out. But Amy, any questions lined up out there?
Yeah, we have one that came in, and I will go ahead and pop it over.
Okay. So question is, how do you know whether or not a loan closes? And this is specific to the 120-day no close, no pay offering. Steve, you want to take that?
Sure. Yeah, we wish we had insight to that. I don't think you would want us to. You notify us. We do make it very easy. Within our platform, Zactus 360, there is a cancellation section. And there's basically two buttons there. One to cancel tracking for loans that are paid off. And the other is to cancel the determination for the refund for loans that don't close. So you notify us. We make it easy to do it that way. We also will support a batch. So if the lender chooses to, once a month, they can go through and pull a report out of their LOS or through a system that they maintain that will show loans that will not close, that are fallout, and submit the determination number to us in batch, and we'll process a batch refund.
Excellent.
We got another one in here, Tom. How long is the no close, no pay promotion in effect for?
It's a great question, Steve. Correct me if I'm wrong, but that is always in effect with being a client of Zactus for flood.
And that's not a promotion. That's a feature.
Yep. So as it was kind of alluded to in the last question, it's there's a 120-day period to inform us, if any loan that had a Zactus flood certification doesn't close. And Steve kind of alluded to, how you can go about providing the necessary data there. But yeah, it's a feature of the offering. I see one more question here. Real quick reminder for the audience out there, as displayed on the screen. Got Steve's email to be able to contact him directly, or if you want to learn more information about Flood Report X. And also a nice QR code up there to do a quick scan and follow Zactus on LinkedIn and get all of our updates. Question I had here on private flood policies. How can we tell if they're acceptable? Steve, please take that one.
Yeah, great question. And that this is getting into the weeds. I'll be brief. So the regulators have developed a compliance aid that's acceptable for a lender to rely upon. Most insurance companies and policies, flood policies that do conform, use the compliance aid. It is a super simple one sentence that basically says that the definition of flood insurance is accepted under this code and other associated requirements. Something like that. There's a verbatim compliance aid. You just see it time after time. You can rely on that. Obviously, you can go through and review every policy. Nobody wants to do that, and that's why the compliance aid came to be. Policies without the compliance aid still may or may not be accepted, though they likely, if they don't contain the compliance aid, it's probably because they are not under the mandatory acceptance criteria. And then a review would be required and consideration for whether or not it makes sense for discretionary. Now, I will say it gets even more complicated, as everything in compliance seems to. That's the case from the regulators. There is one exception, and that's FHA. FHA says for policies that do conform under the you must accept, they actually consider that a may accept, and they do not accept discretionary consideration. They don't consider that. Either a policy is under the mandatory criteria, and then they change mandatory to may, but FHA is the one outlier for the general rule of mandatory acceptance with private flood policies.
Excellent. Thank you, Steve. I don't see any additional questions out there. I know we're coming up on the half an hour here. So again, we're excited to talk to our TMC family about our Flood Report X offering here. And a little teaser for the Collaborative Denver Conference as well. I believe we'll be doing a lightning showcase presentation as well too around our unique flood offering here. So Steve, just want to thank you for your expert insights today as far as the conversation's gone. TMC, we thank you all for the opportunity, and I guess I'll turn it back to you one last time, Steve, if there's anything you want to add to close this out.
No, just really appreciate the opportunity to have this conversation. We appreciate the relationship with TMC. Thank you much.
Thanks, everyone.